Hello all, this is Calvin here. I hope that you all started the week with a positive and great footing. And welcome to this week latest weekly technical outlook on the stock indices, where I'll be touching on the latest technical configuration, trend biasness, as well as the key levels to watch on the major stock indices, which is the SPX 500, the Nasdaq 100, the Hong Kong 50, as well as German two, the German 30 and the Japan 225. So as we know that this week is a very pivotal week. Why? Because this coming Thursday at 3 a.m. Singapore time, we will have the US Federal Reserve FOMC monetary policy decision, where almost all market participants will expect the Fed to actually leave interest rate at 0% and as well as continue its ongoing bond purchases. So what's pretty key on the markets right now is traders as well as market watchers wanted to know at 3:30 a.m. where Federal Reserve Chairman Powell will actually give his press conference to actually pick on signs or signals that whether Powell is comfortable or when will the Fed start tempering its bonds purchases, which is one of the key support that is providing ample liquidity into the system, which actually drives up, I would say, the ongoing major uptrend that is prevalent in the global stock indices. Okay, before we start, let's take a look at the disclaimer slides first. All right, so now let's have a review on last week weekly performance on the major stock indices. So as we could see that all of them are in positive territory. Our star outperformer with expectation, the Hang Seng Index positive 3.1%. The Hang Seng Tech Index, which comprises our China big tech stocks, continue to actually rally double digit performance at 11.3% last week. And what's so interesting about previous laggards, which is the Nasdaq 100, they actually perform behind or underperform the S&P, the Dow Jones, and the Russell in the last 4 to 5 weeks or so, due to the US big tech stock that is being trapped in a kind of a sideways formation since September last year. So what was the catalyst that actually drove the Nasdaq to actually outperform last week, which is had a 4.4%? It's actually Netflix stellar intraday, I would say daily rally of close to 17% that actually created a positive feedback loop into the rest of the FANG stocks, which is we're talking about Facebook, Apple, Google, Netflix, Amazon, as well as Microsoft. And bearing in mind that this week itself, we have Facebook, Microsoft, and as well as Apple earnings result that is coming up um, this couple of days, this weeks. So as we could see over here is that participants has right now kind of a anticipated kind of a rosy earnings report from this big tech stocks, or what they're expecting is positive guidance from their senior management during the press conferences. All right, but nevertheless, even we are more keen about the trend biasness, the key levels to watch, has the ongoing rally in the major stock indices start to run its course, where the medium term trend, we talk about medium term trend is the 1 to 3 weeks, has starts to reverse from the upside to the downside, where we could see perhaps maybe a potentially negative 3 to 4% of corrective decline, or will this medium term impulsive up move continues to actually allow the S&P, talk about S&P and Nasdaq to actually start to see fresh new all-time high. So in this video, I'll be covering this trend analysis as well as the key levels to actually pay attention to in this pivotal coming week ahead. All right, so now let's go on to our CMC platform. All right. So okay, let me take the CMC platform. Okay, so this is our CMC platform. So let me start off with the US stock indices first. So before I start US stock indices, I tend to take a look at one of the growth, I would say proxy of growth, which is the semicon sector, which, as you all know, that semicon is kind of a one of the drivers to actually indicate whether global growth is rosy or is kind of getting soft on the softer footing. Right, as you all know that the next driver of growth will be automation. We talk about electronics, product, 5G. All this requires semiconductor chips, which indicate to us that if the uptrend remains intact on this Philadelphia Semiconductor SOX ETF, it actually indicated to us that market participant or traders has a positive sentiment towards a global economy growth, which in the end translate to a positive feedback look back into risk assets like stock indices. So what we could see over here is that it has a very strong rally since the end of last year, which is 29 December, pretty steep, hitting a key resistance level, which is our target at 42,190, okay, which is the 2.618 Fibo projection taken from here. All right, so what we could see is that it actually come very close to the top of this steeper ascending channel that is in place since 28th of October 2020 low, which is the ascending channel resistance, which confluence with the 421.90 level. And what's interesting over here is that the RSI, which has already been in the overbought regions in the last 2 weeks or so, has started to shape a bearish divergence last week. All right, so what does it mean? It actually tells us that hey, this ongoing rally in the semiconductor ETF is getting too steep, and right now it actually faces a risk of a minor pullback. All right, so if a minor pullback, the RSI is still above this support level, which is 50, 57 level mark. So I do expect a kind of a minor pullback first, or a sideway kind of configuration, heading to test this 398 level. All right, which is also very close to the lower boundary of this ascending channel, as well as the former less steeper ascending channel, which is from 18th of March 2020, broken out on 11th of July, pardon me, 11th of January. Okay, my apologies, 11th of January this year now turns into a pullback support at 398. So nothing of a kind of a very major topish formation. What I mean by topish is like double top, head and shoulder, or kind of a rounding top formation that that has taken shape in this semiconductor ETF. Just a kind of a overbought upside momentum that started to ease off by this bearish divergence, indicating to us there's a risk of a minor pullback before heading upwards to test the next 442.70 resistance. So all in all, not a major topping sign that telling us that hey, this medium term uptrend or from 28th of October 2020, or the major uptrend that is in shape or in place since 18 March 2020 is about to reverse to the downside. So with that confidence, I would say that the very high chance or high likelihood that the ongoing medium-term uptrend, we're talking about the 1 to 3 weeks uptrend on the major stock indices, may continue to actually shape higher highs and higher low from here. All right. Now, touch on the SPX 500. All right. So let's go on to the daily chart first. So as you could see that the SPX 500 continue to be to actually churn or to shape in a very positive configuration since the bullish breakout on 8th of December of this major expanding wedge range resistance that has been in shape or in place since September 2018, broken above this resistance line, the upper boundary of this expanding wedge. So far, trading in a series of higher high and higher low, indicating to us that the medium-term uptrend remains intact for now. RSI still hovering above the 50 level mark, hasn't even hit the extreme overbought level yet, indicating to us that the medium-term upside momentum remains intact. So now going to the strategy chart, which is the 4-hour chart. So what I have over here is that if we could recall last week, we have a resistance or a upside target at 3880, now coming very close to 3880. So RSI pretty positive. Last week actually it actually kind of a over overwork or on this overbought level now has really starts to digest this short-term overbought element and bounce off from this support level at the 50 level mark. So all in all, what we could see over here is that upside momentum in the short term has starts to be on the strong footing again, and potentially we could actually see a further push up to actually test the next resistance at 3960/990. maximum 4080 slash 4100 figure level for this coming week. Then what I do over here is that I will tighten the key medium term pivotal support for this week to maintain this upside bullish biasness to 3750 on the SPX 500. Okay, now moving next to the next US indices, which is was last week outperformer and pretty much important for this week as well, since the major weightage, which is Microsoft and Apple, is going to report earnings this week. All right, so all in all, what I could see on the daily chart is similar configuration on the RSI, still pretty positive, hasn't hit the extreme overbought level yet, continue to trade in a series of higher high and higher low since the bullish breakout of this kind of a symmetrical triangle range configuration that previously kept a previous upside on 23rd of November last year. So what we could see over here is that close to about 3 months plus of medium term bullish uptrend still remains intact. So all in all, what we could see for this week is that we could expect further potential up move within this short-term ascending channel that is in place since 3rd of November 2020 low. So the next resistance to actually watch for us to take note on, pardon me, will be at 13825 slash 875, maximum 1400 100 level. All right, so for this week I actually tightened the key medium term pivotal support to maintain this bullish outlook on the Nasdaq 100. It will be at 13,020 level, which is the former swing high area of 14th of January and 8th of January that has been taken out last week, now turns into a pullback support, and as well as the short-term ascending channel support that is confluence at this similar level as well, which is at 13,020 level. All right, now moving on to the next index that I want to share with you all will be the Hang Seng, or the Hong Kong 50 we call it on our platform. Still recall that why we turned positive on the Hong Kong 50 and expect it to be one of the star outperformer, because of this bullish breakout of this long-term circular descending trend line that has broken out since the start of this year. So ever since then, it shaped a very strong up move. If I could do it in percentage term right now, okay, it's currently up close to 11%, 11% mark. So at the moment in time, no clear signs of a kind of a bearish exhaustion yet, but coming very close to the 30,280 level, which was the target or resistance that I set for last week. So now let's go on to the lower time frame chart to actually see is there any short to medium term exhaustion that we got to be aware of. So if I were to go to the 4 hour chart, okay, before I go to the 4 hour chart, perhaps let me touch on the daily chart first. All right, so let's go to the daily chart. Yes, daily chart, the RSI is at this kind of an extreme overbought level, but you'll know that overbought level, it can remain overbought for a couple of weeks, okay, since the daily RSI. So what's next that we could be aware of is that the next resistance level to actually take note of will be at this area over here, which is at 31,600 level, which is the swing high of 16th of May and 6th of June in the year of 2018. So now going back to the 4 hour chart, okay, let me switch to the 4 hour chart. Okay, so on the 4 hour chart, what we see over here is that the RSI has started to work off from a extreme overbought region that was hit late last week. So what we could see is that today it actually, or on Friday, it managed to actually test the 50 level mark and shape a bounce off from it this morning. So right now it's actually coming to retest that 30,280 level. So what we could see here is it's now starting to actually accelerate. So what's interesting that before I touch on the next resistance level to watch is the way it actually pull back and shape that V-shaped rebound is actually, where does it pull back? It actually pull back and shape that reversal rebound at this former ascending channel resistance, turns into a pullback support level, also confluence with this steeper ascending trend line, a very short term one, that is that managed to kind of a cap the previous higher lows that is in place in 23rd of December 2020. So all in all, what it means that it's this Hong Kong 50 the uptrend, the medium term uptrend remains intact, and it has started to accelerate in terms of momentum. And momentum, in terms of, we talk about short term momentums on the 4 hour, is not showing signs of a kind of a exhaustion yet. And what I do for this week is that even though it hit that resistance level at 30,280, I will actually tighten the key medium term pivotal support level up to this point here that actually coincide with this steeper ascending trendline support, and as well as this pullback support level of this former ascending channel resistance now turn into a pullback support as well. And if you look at this 29140 level, it actually also confluence with the 23% Fibonacci retracement that I take from this ongoing medium term uptrend since 25th of September 2020 low. Okay, as drawn from here. Okay, pretty close to it, I would say. Yeah, this 23.6%. Okay, so all in all, what I'm do expect over here is, as long as 29,140 holds for this week, I do expect the Hong Kong 50 potentially to shape another impulsive uplift within this medium term uptrend that is still intact, to actually target or test the next resistance level at 31,600. Okay, now let's move on to the Japan 225. Okay, let me go on to another tab. All right, so if I were to look at the Japan 225, let me start off with the daily chart first. So on the daily chart, what we could see over here is RSI still holding on to this ascending channel, pardon me, ascending trendline support that is supporting the higher lows since 2nd of December. So it indicates to us that the medium term upside momentum remains intact, hasn't hit the overbought or extreme overbought level yet. The next resistance level to watch will be a bunch of resistance here, which confluence with a Fibo expansion, a cluster of Fibo expansion levels at 29,440 and followed by 13,340. Okay, so definitely the longer term support level will be at 26,215. The previous kind of a swing low area of 30th of November to 21st of December, and as well as this kind of a major ascending trend line that is holding this major uptrend that is in place since 16th of March 2020 low. So going to the strategy chart, so I do have a tighter key, that I would say that a tighter medium term pivotal support level to this 27,900 level, looking for a further potential uplift to target 29,440 resistance, then followed by the top of the ascending channel, the short-term ascending channel that is in place since 30th of October 2020, also resistance at 30,340 level. Shorter term RSI pretty much positive, holding above the inching above the 50 level mark, and as well as being supported by this ascending trendline support that has kept previous higher lows, which indicating to us that short-term upside momentum is pretty much intact as well. Okay, now moving on to the last index that I'd like to share will be the German 30. So if you could go to the German, okay, let me go back to the German 30 index. So on the German 30 index, it's kind of a sideways configuration for the whole of last week. But what's interesting is this sideways configuration managed to actually test and held above the previous swing high level at 20th of February 2020, which is at 13,740 slash 600. So what's interesting about this level, if I have to share with you the longer term chart, which is the weekly chart, this 13,600 level and the particular 13,740 level is the former kind of a all-time high area, which was actually tested or shaped since this January 2018 all-time high previously then. So it's close to about 3 years of range in terms of range configuration for the German 30 index has undergo before recently it starts to shape a breakout from this 13740 slash 13 1600 level towards the later part or the last week of December last year. So all in all, right, for this week's strategy, no change, because since it's been kind of a trading in a sideways configuration. So all I need to do is that I kind of tighten the key pivotal support level for this week, the medium term pivotal support, to that pullback line, which is 13,600 level, looking for a further potential up move to test the next resistance at 14,315, which is then followed by this 14,620 slash 14,730 level on the German 30 index. So what you could see pretty interesting over here is the 4-hour RSI also kind of pretty positive level, trying to actually inch above the 50 level mark, indicating to us some revival of short-term momentum. So thank you for your time, and that's all I have for this weekly technical outlook video. So have a great trading day ahead, and as well as a trading week ahead, and I see you all next in my next video.